Our key belief is that Asia is abandoned in growth stock. It's not because Asia is emerging country, but Asia has world-class labor force with much lower cost. So it is easy to nurture any company to become global champions. We focus on that aspect last couple of years to find any potential candidate to be global champion, and it turned out to be very successful for fund performance. There are several aspects. The most important thing is that Asia has the best amount of talent pool, especially for scientists, engineers, and software developers, helping Asian companies to adapt to the new business models like internet or new product development, the marketing and branding. And second, Asia is already one of the largest consumer market, especially China is already became number one in terms of a PPP GDP in the world. If you are number one in China market, you are likely be number one in the world eventually. Third, it's not easy to tell, but there are some social aspiration to promote growth company in Asian society. Asian society quite pro growth and they try to provide lots of incentive to the growing industries. It actually helping the good talent to come into the new growing industry to produce global level growth company. Inflation is coming, but it's with a growth element. Actually, Asia economy enjoyed the good export boom this year thanks to the inflation environment in the Western world. Good profit for exporter and the manufacturer and the upstream companies would mean the broad-based economic recovery in China and Asia. It also have the asset quality issue in the banking system. All this indicate that this year growth would be broad-based. So year to date, we try to diversify our growth exposure to the multiple different industries. However, we don't think inflation trend will be secured. Eventually, it will be subsided, and then we should go back to early strategy to focus on several major growth themes, maybe early next year onward. There has been many news surrounding this regulatory intervention into internet giant platforms. It's not about China is no more progress. It's more about life cycle of growth themes. E-commerce and the food delivery service is already so big and so influential in China, and they already became like a public utility service. And then the government tried to rein in that this platform became more take a more social responsibility. If any company is small, it's okay. But if you are became so big, you should take bigger responsibility. The implication is that we should be away this giant internet platform going forward, as their industry already become matured. We should focus on early stage growth theme and then try to find the best name in that stage. That's our implication, and that we already reduced position to these internet giant platforms. Don't worry, there are enough growth themes in the market all the time. There has been many growth industry which are still at early stage. We think some industry like the electric vehicle battery, solar industry, software industry, biotech industries in this category. We try to find the best name with global competitiveness from this industry. It's because we made a good profit from investing into disruptors in our fund management. However, at the same time, we should be careful that disruptors can be disrupted by someone else. To avoid this risk, we try to invest multiple stocks from the same disruptive technology. And then we are ready to change our position whenever we see the new changes in technology.